While you were sleeping last night, silver was making people money. Not traders glued to screens at 3 a.m. chugging energy drinks. Not Wall Street analysts with their fancy spreadsheets. Just regular folks who bought silver and did absolutely nothing. You know, the laziest investors on earth. And they're crushing it. For decades, silver was the most manipulated asset on the planet. While the price got hammered on paper markets, China, Russia, and India were quietly stacking physical silver at bargain prices. They were buying while banks played games with paper contracts that probably aren't worth the paper they're printed on. Ironic, right? Now that paper market is breaking. And lazy investors who simply bought and held are about to get rewarded in ways most people can't imagine. Here's what nobody talks about. In 1980, silver peaked at $50 an ounce. Adjusted for inflation, that's $200 in today's dollars. Right now, as of January 18, 2026, silver is trading around $90 per ounce. We're not even halfway to silver's inflation-adjusted all-time high. And this time, the fundamentals are 10 times stronger. Back in 1980, it was pure speculation. Today, it's necessity. Silver isn't just money anymore, it's the most critical industrial metal on the planet. Every solar panel, every electric vehicle, every smartphone, every 5G tower requires silver. And we're running out of it. The world produces about 835 million ounces per year. But we consume over 1 billion ounces annually. That's over a 200 million ounce deficit. 2026 marks the 5th straight year of supply deficits. This isn't temporary. This is a structural crisis. Modern civilization literally cannot function without silver. Then there's the gold to silver ratio. Historically, silver traded at 15 ounces to 1 ounce of gold. That ratio held for thousands of years. But today, gold is around $4,600 while silver sits at $90. That's a ratio of about 51 to 1. Silver is trading at less than 2% of gold's price. If silver returned to just a 15 to 1 ratio, we're looking at over $306 per ounce. That's a 240% increase from current levels. And here's the kicker, gold isn't stopping at $4,600. Central banks bought over 1,000 tons of gold for the 3rd year in a row. They're preparing for something. When gold climbs higher, silver won't just follow. It will explode. Because silver always moves faster than gold. In 2025, gold went up 65%. Silver went up 144%. That's the leverage lazy investors are banking on. Now for the geopolitical wildcard. China controls 60 to 70% of the global silver refining market. And starting January 1, 2026, China implemented new export controls requiring government licenses to export silver. What happens when China restricts silver exports to prioritize their domestic solar and EV industries? The price doesn't just go up. It goes parabolic. Then there's Mexico, the world's largest silver producer, accounting for 24% of global supply. Right now, Mexico is in chaos. Cartels are taking over mining regions. Production is being disrupted. Every ounce that doesn't come out of the ground is an ounce the world doesn't have. Supply shocks don't create 10% price increases. They create 100% price increases. Meanwhile, the paper silver market is collapsing. For years, banks sold paper contracts representing silver that didn't exist. But physical demand is overwhelming the system. Lease rates spiked above 5% multiple times in 2025, and even reached above 8% in January 2026. Premiums on physical silver are exploding. Shanghai silver has been trading at significant premiums over New York silver. The paper market is losing control, and when it breaks, price discovery will be violent. This is why lazy investors are winning. They didn't try to time the market. They didn't trade in and out. They bought physical silver and held it. No margin calls, no counterparty risk, no liquidations. Just silver in a safe. While traders got wrecked playing with leverage, physical stackers just existed. Their silver went from $30 an ounce in early 2025 to $90 today. That's a 200% return by doing literally nothing. And here's the beautiful part, it's not too late. Silver at $90 might sound expensive if you're thinking short term. But if you're thinking about where silver is going, $90 is dirt cheap. When silver hits its inflation-adjusted high of $200, early stackers will look like geniuses. When supply shocks from China's export controls and Mexico's instability collide with exploding industrial demand, silver won't just double. It will go multiples higher. This isn't financial advice. But I am telling you that lazy investors who understand what's happening are positioning themselves now. Not tomorrow. Not next month. Now. Because when silver makes its move, it won't be gradual. It will be explosive. And the people who waited for confirmation will be buying at $150 wishing they had bought at $90. So, while traders are losing sleep trying to time the perfect entry, lazy silver investors are sleeping soundly knowing they own a tangible asset the world desperately needs. They're not checking prices every hour. They're not panicking over 5% pullbacks. They're just holding. Dollar cost averaging. The laziest strategy in existence. And it's crushing everything else. If you found this valuable, smash that like button and subscribe to the Silver Gambit for more unfiltered silver market analysis. The lazy way to wealth is just getting started.